Happy morning. Here is what is taking place. Prices: Bitcoin kept up its 2023, breaking beyond $23,000 for the first time since August, before falling back to trade at around $22,750. Microsoft effectively left the metaverse, according to insights. Will Apple be successful where other significant tech companies have failed? Over the weekend, Bitcoin maintained its current upward trend, peaking at over $23,000, BTC's first time above the barrier since early August, before falling off late Sunday. The biggest cryptocurrency by market capitalization was recently trading at $22,750. It had been essentially steady for the previous 24 hours but had increased by more than 8% over the previous week. Although Joe DiPasquale, CEO of crypto fund manager BitBull Capital, said in an email to CoinDesk that the rise was typical for first quarters and noted a long consolidation period that saw shorts accumulating, Bitcoin has risen about 37% this year as investors ignore various headwinds facing the crypto industry, most recently Genesis Global Holdco LLC filing for Chapter 11 bankruptcy protection. DiPasquale claimed that Bitcoin and several altcoins are overheated and due for a drop, and that the market has increased, partially fueled the short squeeze. We wouldn't be shocked if Bitcoin tested $20,000 in the near future. Market participants should be aware of negative possibilities and possibly look to take profits for the coming week. Ether had a similar weekend trajectory and was trading lately around $1,640, up 1% from Saturday at the same time. The market value of the second largest cryptocurrency has increased by almost 4% during the previous week and by 35% since December 31st. Although AXS, the native cryptocurrency of play-to-earn gaming guild Yield Guild Games, and YGG, the native cryptocurrency of Axie Infinity gaming platform Axie Infinity, were up more than 38% and 18%, respectively, the majority of other major cryptocurrencies took on a light green tint. The CoinDesk Market Index, CMI, a gauge of the market performance of the top cryptocurrencies, increased somewhat. The Friday increase in equities indexes saw the tech-heavy Nasdaq and the S&P 500, which has a significant amount of technology, both climb by 2.6% and 1.8%, respectively. This led to the weekend increase in cryptocurrencies. Traditional asset markets are hoping that the U.S. Central Bank will scale back its next interest rate hike from its more recent diet of 75 and 50 bits per second hikes to 25 basis points, BPS, in light of rising evidence that inflation is declining without sending the economy into a deep recession. According to a statement from the largest cryptocurrency exchange, Binance, Signature Bank would not process cryptocurrency transactions worth more than $100,000, according to a Bloomberg article. According to a statement made by Binance to Bloomberg, as of February 1, 2023, Signature, which has been attempting to lessen its exposure to the cryptocurrency markets, no longer supports any crypto exchange users with buying and well quantities less than 100,000 United States dollars. Binance indicated that some users may not be able to use SWIFT bank transfers to purchase or sell crypto with, for USD, in lower amounts. Binance stated that this would be the case for all Signature's crypto exchange clients. As a result of the growing effects of the collapse of cryptocurrency exchange FTX, financial services companies like Signature, which has been regarded as one of the most crypto-friendly banks, have recently reduced their exposure to cryptocurrency. The CEO of Signature announced in December that the bank would reduce its cryptocurrency-related deposits by $8 billion to $10 billion. As of September 2022, nearly 23.5% of the $103 billion in total deposits made by the New York-based bank originated from the cryptocurrency sector. However, given the current problems in the market, Signature will eventually lower that sum to under 15% and under 20%, according to Joe DiPaolo of Signature, who was speaking at an investor conference organized by the financial institution Goldman Sachs. Despite having a cautious prognosis for the coming week, BitBull's DiPasquale was more upbeat about the appetite for risk in the cryptocurrency market. However, he added, "We feel that may need more time and could materialize by end of the year. This is a healthy sign for an ultimate recovery." Microsoft is one of many large IT companies that has drastically reduced its workforce. Although layoffs at the computer behemoth were to be expected as it followed the rest of its contemporaries, they have affected a particular area of the business, which may affect how the metaverse will be envisioned in the future. According to Windows Central, Microsoft has fired everyone on its mixed reality team, which was in charge of developing its HoloLens augmented reality headset and virtual reality headsets. This includes AltSpace VR, Microsoft's alternative to Horizon Worlds in the social VR space. Microsoft referred to its work in augmented and virtual reality as mixed reality, and given the size and scope of the corporation, it undoubtedly had the best chance of turning this technology into a new paradigm for computing. As of December, Microsoft Teams, a popular communication tool, was completely incorporated into the HoloLens. But Microsoft found the metaverse to be difficult. Microsoft has targeted enterprise users, whereas Meta, formerly Facebook, has focused on the retail side of virtual reality and the metaverse. The US Army was meant to be the HoloLens' top enterprise customer, but Congress isn't too keen on the notion because testing has shown conflicting results, which has resulted in limited funding. Around the middle of the year, Microsoft's HoloLens director left the company. This isn't really supportive of the thesis, if you're a believer in the idea that the metaverse contains some kind of headset for virtual reality. Although the battle to popularize VR, AR is not new. It gained new momentum when venture capitalists coined the phrase metaverse, although the metaverse does not necessarily include VR or AR. VR has had trouble moving past its reputation as a specialized product in the gaming industry. Since their widespread launch in 2016, headset sales have increased, although this rise has paused. IDC, a consultancy, released a new forecast for AR/VR headsets at the end of December, which showed the market's growth decreasing. The metaverse and VR/AR should have achieved success in the enterprise. However, it doesn't appear like this has gained any traction either. Microsoft decided to eliminate these teams when it needed to cut costs because executives, who had access to confidential data and conversations with potential clients, reportedly didn't see the value of the medium. The existence of Apple is the unmentioned problem here. Apple has the capability to successfully create a market for a product that others have attempted and failed to do. Remember that there were other smartphones before the iPhone. Before Apple joined the market, internet-connected PDAs and phones were available from Palm, Microsoft, and Nokia. But in comparison to the iPhone, all of these were basically insignificant. According to a Bloomberg story, Apple still intends to use a mixed reality headset to enter the metaverse in 2024-2025. Due to technical difficulties, the company had to delay its initial intention of creating AR glasses, but it is still dedicated. It's possible that Apple will enter the market in 2025, by which time VR/AR will have been around for 10 years. Any other media with such poor performance would be written off as a niche, and consumers would stop paying it much attention as they moved on. Where Microsoft and HTC have struggled, the question is whether Apple will succeed. This is essential to the theory of the metaverse, where a headset would display a virtualized version of reality.